Hey everybody, I did a video on Opendoor when I was on live. I did a YouTube live not too long ago and we went over Opendoor technology, but I want to do a quick video on Opendoor right now because people probably have a lot of questions why Opendoor is kind of falling, right? It's been in a downtrend for a while now. Ever since November 13th, Opendoor has been in a downtrend. And let's go over some news on the reason why Opendoor is in a downtrend. And you have to remember, Opendoor is a recovery stock. So if the economy is not recovering, Opendoor is not recovering. So that's going to be the issue for Opendoor technology, right? So Opendoor stock slumps as cash warrants CFO sells $39 million worth of shares. But he said that she sold those shares for tax purposes, not because the stock is not doing good. It's just because for tax purposes, so she sold the shares, right? And Opendoor recently received a hold rating, not because of the stock, it's because of the financial situation of the economy for the U.S. right now. That's why I received a hold. The Fed minutes today showed that there was a divide for the October rate cuts. We already knew that. But they also said that there's a huge divide for a rate cut in December. So the chances of a rate cut in December has lowered even more because there's a divide and the minutes showed it. That's what happened today. And that's why Opendoor went down so much, 11%. And then also what was said in the minutes is that a rate cut could also increase inflation if we did a rate cut in December. That's what they were saying. Not me, but that's what they were saying in the minutes. And I did a little research on it, and it says, yes, an interest rate cut can increase inflation because it stimulates economic activity by making borrowing cheaper, which encourages more consumer spending and business investment. This increased demand can lead to higher prices if it outpaces the supply of goods and services. So if it's cheaper to borrow money, people are going to keep borrowing money, and it's going to hurt the economy in the long run. And the more money people keep borrowing, the more money they're going to keep spending. And the more they spend, what happens? The price keeps going up. Prices don't ever go down unless people stop spending. And if people keep spending, the prices are going to keep going up. Businesses want to make profit, and they're saying, hey, these consumers are spending money. Every time we raise the price up, they're still spending money. So let's raise the price up some more. The more they spend, the more we raise the price up. Now, if people slow up the spending, they're kind of forced to lower the price a little bit, right? To make the price more affordable and more attractive. So that's the issue that we have right now. But hey, that's what they said in the minutes, and that's why they're worried about doing an interest rate cut in December. And then Trump teases he'll fire Bessent if Fed doesn't cut interest rates. And Trump also accused Bessent with siding with Jerome Powell. And that's why he's teasing to fire Bessent. Can he fire Bessent? I don't think he can, but hey, I'm not sure. Correct me if I'm wrong. I don't know. The president attacked Powell for months, arguing that the Fed has been too cautious in lowering interest rate. That's possible. It's very possible. I'm more of a chart person, not too much into about the interest rate cuts. Maybe you know more than me. I just read the charts and tell how it is. But that's what we're talking about as far as the news and why Opendoor is having a hard time going up. The interest rate cut in December, possible higher inflation, jobs numbers aren't that great, data reports are missing. There's a lot of things going on. So in the weekly chart, we are in a possible bearish move because this red weekly candle is kind of overshadowing this green candle right here, the prior week. So that's not good. We're not in a downtrend yet, but that could possibly start a downtrend based on the two candlesticks on the weekly chart. And the daily chart, we are in a downtrend. That would be the downtrend for Opendoor, and we need to break the 737 area, and there's a strong resistance at the 775. There are two moving averages right there that it needs to be broken, and that's going to be a tough one, the 775. We are trading between the support of 654 and 737. And right now, after hours, we're at 691. Here's a support, 654 at 737. And here's a resistance right here. Kind of in the middle of it right now. So 50-50 if we'll break it or not. But as far as the sentiment for the economy, it isn't that great at the moment. But, Opendoor could turn around at any moment's notice. But we got to have good news as far as the economy. It seems like Opendoor not putting out a lot of news. Some companies put out news like every day or every other day, but Opendoor seems very quiet. I don't know if that's a good thing or a bad thing. Maybe they're focused on getting the job done. So that's why maybe they're not putting a lot of news. But as I always say, this is recovery stock, and the stock only goes up once the economy recovers. Will the economy recover? It usually always does. Economy in the U.S. is always resilient, and it does recover at some point. But the longer it takes to recover, the harder it is for Opendoor, because this is a business of selling houses, and we need to sell houses that we acquired. We can't hold these houses forever. No one's buying them. How are we making profit? So that's why we need the housing market to recover ASAP, and that's only going to happen when the economy recovers. Carvana went through the same thing. When the used car industry was struggling, Carvana struggled. When the used car industry recovered, Carvana recovered. So it's kind of the same thing. When the economy is not doing good, no one's buying new cars. Some people are buying used cars because they have no choice. But housing, no one's buying new houses. No one's buying used houses because it's a bigger investment than a car would be. So that's why people are kind of just waiting. They're kind of waiting and see what's going to happen. Also, investors, they're waiting as well. So in the daily chart, we have the resistance at 737. The next one would be at 775, as noted earlier. The next support would be 654 and then 623. I noted on the YouTube live, we need to hold at 623, because if we don't hold at 623, there's not a lot of support after that. That's the issue I see with Opendoor. Next one would be 549, 550 area. Then if it don't hold at 550, we're talking about all the way to 442. And we definitely don't want to go down to $4. We don't want to go down to $5. But right now, after hours, we're at $6.91, really far from that $5 and $4 area. So hopefully we can keep holding this area, and we get some good news about the housing industry. The data reports come out. The interest rates start to cut. But we have to wait and see, and they keep delaying these data reports. The longer they delay data reports, the longer it's going to take for the market to recover. And the price we're looking at for Opendoor, to know for sure it's on its way back up and possibly hit $10, the main price it has to break is going to be the $850. Once we break $850, that's going to be an area where, like, okay, Opendoor is back in business. Time to go back and try to hit that $10 again. That $850 is going to be that main price to beat, $8.50. Anything lower than that is kind of iffy, 50-50, maybe consolidating around that area. I want to consolidate below $850. I don't want to go below to $5, $5.50, or $4. We don't want that at all. Consolidating is much better than creating a downtrend. So if we trade under $850 for a while and then break it later, that's going to be good news. You got to get these data reports and find out what's going to happen next. So retail investors and institutions can start investing in Opendoor again, start buying shares, so the price can start going back up and we can test that $10 again. All right, everyone. Thanks for watching. Don't forget to subscribe, like, and comment. Take care.